morning and welcome to a golden edition of Join the Dots. Yes, today I'm going to concentrate on one piece, only one piece, okay, which really grabbed my attention on gold because of the detail and the logic and the facts and that word truth. Okay, so we had that from David Morgan on Saturday on silver. Let's go through this Alasdair Macleod piece, interview. And the first 11 minutes, let's think, we've got, again, something you've heard before, so start to join the dots, please, like I do. This is going to be a much bigger crash than 1929 was. Not in terms of numbers, because obviously we're 100 years later, or 96 anyway, but in terms of effect. Okay, that's the point. And it will likely happen by year end, says Alasdair. Those of you who keep asking me for timing, I don't care about timing, I'm on journeys. Certain journeys much more important than trading into seconds and minutes. Look what happened at gold and silver at the end of last week. People tried to sell it off, bang! People in for the journey came in and said, thank you very much, I'll have it $1 cheaper. Yes, it's going to happen time and time again, but the journey will be safe. Now, what he's saying is here is bullion is not available, and now the major banks are recommending gold at 3.8. Isn't it amazing? All those wonderful, incredible, technically gifted analysts at banks are now saying buy gold at 3.8 when it was 12.54 just 5 years ago when I started. Unbelievable. They get paid fortunes, don't they? Get paid fortunes. Now, what Alasdair saw last month, September end, right? Stand for deliveries in COMEX on gold, 65 tonnes. I kid you not, 65 tonnes of gold stood for delivery. How much silver? 1,000 tonnes. Now I had to look this up. There's 32,507, I think it is, ounces in a metric tonne. So that's 32 million ounces of silver was stood for delivery. People cannot get these metals from the refineries now. So what they do is they go into the futures market, perhaps pay a premium, wait for the contract to expire and stand for delivery. And take the money, take the bullion out of the system. This is going to accelerate, okay, because banks are only just waking up after 5 years. China and its citizens now, Alasdair has done some work on this, and I trust his work. China and its citizens have 75,000 tonnes, okay, out of 200,000 tonnes above ground stocks. So China has more than a third of all the gold on the planet. Its government, its institutions and its citizens. And remember, China is a country that could, at some point, seize the gold from its citizens, especially if the motherland needed that gold. It would do that, and it would have a third of the world's gold supplies. And what value if gold is revalued? So Alasdair again comes on to when the AI S&P boom crashes, portfolio will rise, or even if portfolios were then recommended to increase from 0.5%, which is where they've been the last 5 years, 0.5% to 1.5% gold, that would require 25,000 tonnes of gold. 25,000 tonnes of gold would be required to take portfolios up from 0.5 to 1.5, not to 30, not to the 20 that we've seen recommended by Bank of America, by Morgan Stanley, by the Market Sniper. We've seen them recommend 20% gold. Just to increase to 1.5% would see 25,000 tonnes of gold, but it isn't available. It's not available. How are they going to do it? And Alasdair actually brings in Exter's inverted pyramid here. Fantastic. All these dots are joining. They're all joining. All the people out there are seeing the dots join, aren't they? And I'm bringing them to you in a world where you are not going to see it on the television, you're not going to see it on CNBC or Bloomberg, you're not going to see it on Fox Business, you're not going to see it in the FT, you're not going to see it in the Wall Street Journal. They don't want you to see it, or they're just ignorant. I'm not sure. I think it's a bit of both. If banks are only recommending gold now after it's trebled, there's a lot of ignorance there, isn't there? Okay, so what else have we got here? base metals will rise as well. Now, this is something Greg Mannarino has said, because he's been commodities, 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 commodities. And it's not a feature of the commodity going up, is it? It's a feature of the fiat currencies collapsing. That's what we're living through. We're living through the collapsing trust of fiat currencies. So you need to have assets. Okay? Greg Mannarino, executive, says the same. So 14 minutes 40 into this interview, 1929 and 1987, both in October, both saw 20% wiped off the stock market in one day. This is possible now. This is possible now. I remember it happening in 87 in England. I had to go into London, and there was virtually no one on the trains, because we actually had a hurricane that day in England. It was the first hurricane we'd had for, I don't know, centuries or something. And so there's only about 6 of us on the platform out of 1,000 normally. And I got into Credit Suisse, and there was only about 10 in the office as well out of 1,000 normally. People don't try very hard nowadays, do they? It's very easy to, I'll just stay at home then. Anyway, the stock market fell 20% that day, as it did in 29. The leverage in the market at the moment, 1.2 trillion, okay? And that's a lot more, even in relative terms, than 29. It's a lot more. After 16 minutes, he talks about the initial sale of bullion to cover losses in other markets. And yes, we can see that. And this is why I say, don't try and time it. Don't try and time it. Just go for the journey, honestly. You will see your prices hit. You will, on that day when everything is being sold, you will see your stocks or your bullion, you will see the price hit. Because some people, it's all they can sell to cover their margin losses on AI. It's all they've got left. So their broker or their bank, which holds it, sells it into the market, just the way it is. But does it matter in the scheme of things? Not to me. And I wouldn't try and time it. I really wouldn't. So then, of course, what do they do after the crash? 3 days, 4 days, depending on how long the crash lasts, they want bullion. They want bullion. And there's none there. There's none there. There might have been a little bit sold into the market out of distress, but there won't be enough to meet the new demand, because then what is your 60-20-20 when the stock market is falling 20% and is falling and falling and falling? Okay, it's not 60-20-20, is it? You don't want to be there. So he doesn't give forecasts and he doesn't give numbers. He just says the risks are just huge. And that's what you have to understand. It's the journey. It's the journey again. You don't care what the stops are. You don't care how long it takes between stops. You just know you're going to get to the end of the journey safely. That's all I do. So again, as he says, the system works 15 years out of 16. And then kapow! And that's what happens, isn't it? 2008, 2025. So you've had 14, 15, 16 years of peace. Well, you had COVID in the middle, and that saw the S&P under 2.2. Excuse my friend, the neighbour. And so what are we going to see? Well, they can't get bullion. So they'll go for miners. Because miners have got the bullion, haven't they? Under the ground. Safely under the ground. People will go for miners. 950 tonnes stood for delivery so far this year. 950 tonnes have stood for delivery so far this year. Okay, likely to be 1,500 tonnes by year end. How do the ETF managers, those who have to put the gold in the bank when you buy the ETF, how do they buy the gold? How do they get it? Okay, so Alasdair goes into ranking gold, silver and platinum, and he says silver first. As I've said all along, as Greg has said, as Grant has said, everyone who's watching this market knows silver will outperform gold. Doesn't mean you shouldn't have gold. That's your bedrock. But silver will outperform it. Everyone knows that. And when everyone knows it, it happens. So he sees the 81 gold-silver ratio at the moment, which was well over 100 when I started, and I told you that. I told you it was wrong. I told you it wouldn't last. It's now down to 81. But he sees it settling in the 30s. I can see that. And once in the 30s, then he would review that position again. Because once in the 30s, then obviously it's a question of where does it go next. But he sees it going to the 30s, certainly. Platinum is not a precious money and it's not money. Not a precious metal and it's not money. I've said that. Platinum is where those who can't understand the serious gold-silver story are speculating in platinum. They'll get hurt. They'll get burnt. Okay? Because it hasn't got anything intrinsic behind it. It's not gold, it's not silver, it's not a precious metal. It hasn't got the demand that the others have got. And the car industry is now in trouble. So how much platinum is needed? Really? So anyway, zombie companies will fall as long rates rise. Now I can see this, and I've said it before. Long rates will rise, okay? I think I have to do it that way. Okay, the yield curve will steepen. Long rates will rise. Governments and central banks will try to underwrite everything. They will. They'll try and say, that's all right, we'll underwrite everything. They can't do it. The numbers are too big now. This week in the UK, evidently, the UK government had to inject a lot of money into Jaguar Land Rover, as it had a cyber attack, would you believe, and its problems threatened its suppliers. And so the government quickly tried to underwrite everything and pour money into the company to protect the suppliers, because they've got all the jobs, haven't they? All the companies supplying Jaguar. Ah, hold on. We're thinking car parts here. I think we are. Oh dear, First Brands. Now the Fed is stuck. And after today's growth at 3.8%, it's even more stuck, isn't it? Okay, so Trump wants Marin to force rates down to 2, and yet they've got growth at 3.8, and they've got inflation at, well, 11 really, but let's say 2.8 on the CPI, and the Fed haven't hit their target for 55 months, and Trump wants rates at 2. Dollar's going to go up. Fed looking at jobs, not inflation. Yes, they do have a dual mandate, full employment and inflation at 2, but they haven't hit inflation for 55 months. Okay? So as they try to rescue everything, they will want rates down. The Fed is totally wrong-footed. Lower rates when gold is screaming that purchasing power is dying very fast. We are in a far, far bigger credit bubble than 1929. And the stock market is driven by momentum, not value. There's no value there at all. There's only momentum. Okay, as long as people pile in, it'll go up. Greg Manarino said that for a long, long time. But the rise in bond yields will likely pop the equity market bubble. And we know that. And again, Greg has said it for ages, hasn't he? The debt market is what you look at. Eurodollar University says it. You look at the debt market, forget the stock market. It's a clown, it's an illusion, it's to entertain. The debt market is for the serious money. So the same as 1929, the tariffs on top of the bubble. And we have that coincidence, don't we, where we have the tariffs like the Smoot-Hawley Act in 1929, which killed it. So watch the bond yields. And I've said this, haven't I? Watch the dollar, watch the bond yields. Okay, up 5%. If the 10-year hits 5% or the 30-year hits 5%, the mortgage rates will then rise and everything will collapse. So foreigners have 40 trillion in US assets. They will need compensation for that risk, so they will look for higher rates or they will move out. Foreigners are at risk to the dollar. Okay, so that's the end of the piece. That's Alasdair Macleod. It's a beautiful piece. Please watch it. Please watch it. Okay, I will find for you the most brilliant pieces out there, which you can't find easily, and the press won't tell you, and media won't tell you, BBC won't tell you, no one will tell you. Join the dots. We will find the best pieces, the best analysts, the best experts, and the best information for you by joining the dots. Thank you very much.